The moment price breaks below this, I think that all the traders who have positioned themselves in longs at this level would puke their positions, and that would only add to the selling pressure, and that opens the floodgates towards the 18,000 level of support. Good day, traders, and welcome back to another episode of Crypto Vibes with Walt. Thank you everyone for tuning in. I really appreciate your support. And for the folks who are new, I give my opinion about the macroeconomic stuff that affects price action, and then we'll look at some of the charts of equities, traditional markets, and crypto as well. So if you could hit that like button and subscribe to the channel to show your support, that would be greatly appreciated. Now, we had the CPI numbers coming out earlier this week, and with the CPI print coming out higher than expected, Fed now have a much harder task at hand, and the probability of them becoming much more aggressive in terms of tightening the economy to bring down inflation is substantially increasing by the hour. Now, the higher CPI print clearly tells you that it is going to take a longer time and will require higher rates, maybe even require more demand destruction, as in the higher unemployment and slower growth, which then raises the probability of a recession if the US is already not in one. Now, as you can see, the forecast was around 8.1%, which was a lesser number expected than the previous time around. So from 8.5, the expectation was that the CPI print or the inflation print would go down to 8.1%. The numbers could not meet what the expectations were, even though it was lower than July's year-on-year CPI. It was still higher than the expected numbers, and hence we saw the market-wide crash, because the markets were now anticipating a 75 basis point rate hikes in the coming weeks FOMC. Now, it is clear, and the Fed has also reiterated it multiple times, that the target is a 2% CPI, and that we can expect more pain in their attempt to do so. So it is evident that they are looking, that what they are looking to happen is for something to break in the markets, and before they start cutting down the rates again. And we are far, far away from something breaking right now. Now, as per the probabilities, as you can see, that there is around 82% probability of a 75 basis point rate hike, and a 18% probability of a 100 basis point rate hike. Now, if this number was well, not even substantially, but higher than anything higher than 8.6 or 8.5%, then I think that the probability of a 100 basis point rate hike would have been much higher than just 18%, because then it would have been evident that the CPI, the year-on-year CPI, is not decreasing in spite of Fed tightening the economy and raising the rates as much as they have till now. So it's still a high probability that a 75 basis point rate hike is expected, and that's exactly what the markets are pricing in right now. Now, there could be very high volatility in this week's price action, especially if you look at the economic calendar. So we have the FOMC statement, funds rate, and projections, and then the press conference. So what Powell speaks in this press conference could then affect the price action, because he can easily say that we have raised a 75 basis point rate hike this month around. However, in the next FOMC, 100 basis point is more than likely, and that would absolutely nuke the market. So something to watch out for. Next week, I'll probably won't be positioning in myself in a lot of trades. I'll let the FOMC resolve, look at what markets are doing, and then go in for the trades. Now let's look at the charts, starting off with the dollar index. And if you recall, I've covered this on multiple occasions that this was a key resistance that one needs to watch out for in terms of price action for the dollar index. And this is a key high, which is September 02 or 2002 high that had key liquidity above it. Now, even though the markets have, or the price has convincingly reclaimed this level of resistance into demand, but there are certain factors that could affect the price action of dollar index, and that could result in a retrace down back, at least for the short term, for the dollar index. First of them being that those 2002 highs have been taken. So the price has swept liquidity above these highs. So there's no real drive to take price further higher until some of the longs have been stopped out on the dollar index. This is a key level of fresh demand that remains untested as well. So if the dollar index retraces back down, I think that the probability of it finding a short-term bottom or a higher low is substantially high at this level. So any retrace back down to this level, and then we can expect the dollar index to rally higher. And now why would the dollar index do that? As I just explained, firstly, the September 2002 high has been taken out, so the draw on liquidity now shifts to the downside. Then if you look at the daily, we have clean lows at this level, which has been untapped as well. So take out these lows, tap the fresh demand, and then rally higher is something that I'm expecting on the dollar index on the daily. So I'll be watching this price action. And again, if you look at the H4 chart as well, so the weekly high has been taken, and now the H4 high has been taken as well. So as soon as price breaks below this level, it shifts market structure onto the bearish side. That opens the floodgates, and a high probability that price tags the weekly demand and takes out all these lows before continuing its journey towards new highs. So this is something to watch out for on the dollar index as the FOMC approaches. Now let's look at what S&P is doing. Now on the S&P 500, the 3,500 region obviously remains my long-term target, or at least where I expect a possible bottom to form. Now this was the key range that I was watching week in and week out, and this was a key level of supply that I had talked about on multiple occasions as well. Now, as you can see, price deviated above this low, tried to accept, failed to do so. And as soon as price broke down, it exponentially expanded to the downside. Again, as soon as price reclaimed this level, rallied higher, straight into a level of supply that I had talked about on multiple occasions, swept these highs, and then again sold off aggressively. This shows the importance of this range low as well, because if you can see, price came down to this level, tried to rally, but failed to do so, and then sold off aggressively. Again retested this level, and then again sold off. Now, I had covered or I had predicted that if there was any place that a high or a top is to be formed, it has to be this level, as you can see on the left hand side of the chart. So again, just one of the examples of how we kind of call each and every move in the markets. The reason was pretty simple. This was again the range lower key SR that resulted in an expansion either sides once a reclaim or break was formed, and then this was a key level of untested supply as well. So price came back into this level, deviated above, formed the top and then sold off aggressively. So now I do anticipate price to move back down into this level early this week, take out these lows, and then possibly rally higher if there is some sort of bullishness that comes into the marketplace. The probability of price moving higher is obviously very low because of the macroeconomic factors that we've just talked about. However, again, this region is something that I'm watching in case price sells off. Again, reclaim this level convincingly and then we can target higher prices. But for now, price is closer to a demand rather than the supply. So these are the levels that I'm watching on S&P and I will act accordingly. Now on to Bitcoin. Now let's look at price from a macro perspective first, right? Now, what have we seen in the historical bear markets or capitulation? If you look at the left-hand side of the charts, now price has almost always come down and tested the bottom half of the range, or the inception of the expansion in previous bear markets. So if you look at 2014 and 2013, price came down, retested probably the exact bottom half of the range, or this was the consolidation that led to this massive expansion over here. And then if you look at 2018 as well, this was the consolidation that resulted in the all-time highs. Price came back, retested it, rallied higher, and then again once it retested the consolidation that led to that expansion higher. Now in this move, clearly you can see that this is the consolidation that led to this massive expansion. And this exactly comes down at around 10,000 to the 9,000 region. And again, this is covered week in and week out as to why this is important on the weekly, because we have some fresh untested level of demand at this region. If you look at this level over here, and also this is kind of a clean SR as well. So as soon as I think that price breaks this level, there's a very high probability that this gets tagged, obviously because of the reasons that I've just mentioned, as well as this comes out as a mid-range of this massive expansion or this massive range that was formed around 2018, which was in the bear market, the 2018 bear market. So a lot of confluence at this level. So once price reaches this level, that is when I guess we have to be vigilant as to what price is doing, because this is very well a region wherein a bottom could form somewhere around the Q4 or early 2023. Now if you simply look at the price action in this region, so currently price is sitting at the support or the previous all-time high support, with all the attempts to move higher ending up being 100% retracement back down. So by simply eyeballing the price action that we're seeing right now, it seems like just a consolidation before we see the expansion on either sides, right? And with the macroeconomic factors in effect that obviously I just covered, the probability of the expansion to the downside is substantially higher. So now looking at the daily chart from a market structure standpoint, we pretty much have a very trash market structure as price in a macro consolidation or range. But if you still want to look at it from a market structure standpoint, we had a clear intermediate trend or a short-term trend formed due to the high highs and high lows, which was broken once price traded below this level. And once again, this was an intermediate high that was broken to the upside. So you can say that probably this is like the formation or a very early stage of a bullish market structure because of the higher high we have just formed. So now if a higher low has to be formed, it has to be exactly at this level, because at this region, I think because of all the tests that we have already had this region, this probably won't hold. So if a price has to move higher, this is where a higher low is to be formed, because this was again the consolidation that led to the move down, and again it was reclaimed. So any move into this level, as you can see that price is currently consolidating at the same level. So very high probability if price is to move higher, it has to be from this level. And another reason why I think that price can move higher from here is because all this these moves that we've seen. So all the traders who were positioning themselves in longs, once price tagged this level and obviously swept this level with their stops below this level, have now been stopped out of because of these two moves down. So now that the longs have been stopped out and shorts have been trapped, I think that this is where we could see a quick unwind to the upside. So now where can price top out, right? If it is to be bearish. Now you can also consider this as a massive range as well, because this is kind of the range high, this is range low, and this kind of comes in at around the mid range of this move. So pretty evident level of supply and demand that we have right here. Form a higher low, and I think that if price manages to break above this region, then there's a pretty high probability that the September high has been the September high gets taken out next, because obviously we've already cleaned out all the August highs. So this is one of the targets if price reclaims this level. But I think that again, because of all the bearish narratives that we have in the market right now, price could easily just test this level and sell off aggressively. And once price moves into this level, I think that this then breaks down in early, somewhere around probably late September or early October, once the FOMC minutes and the FOMC the rate hikes are out. So this is something to watch out for, kind of this level and this level. The 21,000 to the 18,000 region is something that one needs to be wary of from a bullish and a bearish price action standpoint. Now in Ethereum, we have a clear range that the price has respected over the past few months. Range low, range high, retest, rally higher. Price deviated above the high and an aggressive sell-off. Again, retested, found support at this level, sold off. Again, acting as a level of SR here and here as well. And then now I think there's a very high probability that the price is targeting the range low next, because we've already tagged and taken out the range high. So, and this is also a kind of weekly level of demand. If you see, this is where price formed the bottom before the expansion higher, and once again acting as resistance, support. So this is a level that I am looking at on Ethereum. Take out these lows or form a deviation, get back within this range, and then we can target mid-range and then possibly the range high on Ethereum. Pretty simple action plan on Ethereum. If you look at where price is at right now, so again, you see, if you see the ETH merge narrative is kind of done. So there's like very little catalyst that price could find to move or to rally higher. So Now, if you look at the weekly again, I think that if this range low gives way, then again all this inefficiency gets filled, and price should again retrade back towards the 1100 region, which is in confluence with the daily level as well. So pretty simple price action on Ethereum right now. So this is all I have to cover this week in this week's video. Obviously, we'll be keeping an eye on the FOMC minutes, as well as the rate hike and the price action that develops around FOMC. So thank you everybody for tuning in. I hope you guys found this insightful, and if you did, hit that like button, subscribe to the channel, and join the Telegram as well. I will talk to you guys soon. Cheers everyone.